Well, good morning, everyone, and welcome to the BetaShares first installment of our thematic webinar series. Today, we're talking about electric vehicles and autonomous driving. We will be briefly speaking about the ETF DRIV, but we really wanted to have more of a conversation around what's going into electric vehicles and autonomous driving and some of the lesser known points about the industry and why we think this is a good thematic going forward. So thank you for joining us. We hope that you have plenty of questions and we're more than happy to tackle them throughout the webinar, but also then we'll allow time at the end to really have a dedicated discussion on autonomous vehicles, electric vehicles, and just the driving and auto space in general. Just before we begin, it's important to highlight that the information contained in this presentation is general information only and does not constitute personal financial advice. If you are looking for personal financial advice, please look at your financial advisor or seek financial advice. Just before we start, and really quickly, as I mentioned, we are running a question and answer session at the end. Please put your questions in the question bar on your screen and we will get to as many as possible and hope to have a great discussion at the end. Joining me today, our special guest, Cameron Gleeson, who's a senior investment specialist at BetaShares. He'll really be running through the content today, and I'll sort of be asking questions as we go along. Cameron's very invested in the driverless space and has done a lot of work in particular on this ETF, and certainly is very knowledgeable in the sector. So welcome, Cameron. It's great to have you here today.
Thanks, Blair.
So Cam, we all know that. I guess we all know that what we drive and the way we drive are changing. You can see here certainly a cross-section of how the automobile is changing. Electric vehicles in general aren't a new concept, but can you run us through some of the finer detail about changes to our cars and how they're changing?
Yeah, thanks, Blair. Great. Look, I think there has been a lot of media coverage on electric vehicles specifically, and on obviously the environmental impacts and benefits of electric vehicles. Perhaps some of the things that we'll get into today that are less well known is really the implications for the automotive industry as a whole, and also autonomous driving, how that changes the way that industry operates, how a car is built, and then flow-on effects in terms of the experience of driving a car, and also potentially ownership models, the way we use cars. So it's just a really exciting space that touches all of us. Looking forward to getting stuck in, Blair.
Fantastic, Cam. And look, I guess just moving forward to electric vehicles and looking at sales set to explode, we know that they're exploding in usage, and you can see here, and we really know that the reality is over the next couple of decades, they really are going to explode in usage, and we're going to be seeing more and more of them on the road. So really, that's why we're talking about the investment opportunity today. You can see on the slide by 2030, we're seeing that the base case is that 30% of the population or 30% of new cars sold will be electric vehicles. Now, if we take into account hyper adoption and looking at potential policy changes as well as innovation in the space, that could scale even higher. So I really wanted to start today, Cam, by taking a bit of a domestic view. And we're definitely starting to see, and I know in my own personal experience, we're seeing more Teslas on Australian roads. So clearly more people are buying them. And I noticed that the Tesla Model 3 is now the 5th top selling car in Australia. So where is the adoption of Australian electric vehicles at, and how do we compare to other countries?
Yeah, good question. So in Australia, electric vehicle sales, about half electric vehicles sold are Teslas, the dominant brand here. We're a long way behind the rest of the world. About 2% of new car sales are electric vehicles, but that's actually grown from less than 1% a year ago. So that adoption is creeping up from a lower base. Compared to Europe, Europe's sitting at around about 20% of new car sales are either battery electric or hybrid vehicles. So far higher level of adoption. You look at a country like Norway, where they've got policy incentives that mean that 8 out of every 10 new cars sold are actually an electric vehicle. So hyper adoption there already. In Europe, Volkswagen is the #1 producer of EVs from a market share standpoint. In China, you're also seeing very large levels of adoption, about 18% of electric and hybrid in terms of new car sales, so high adoption rates there. A lot of support from the government. From a strategic perspective, they think electric vehicles are important, and they've got local heroes, companies that are making EVs like BYD, Li Auto, and the like. The US is a bit behind, so the US sits around about 9% of new car sales. And that's heavily skewed to California, where there's policy incentives and obviously consumer preferences in that progressive state, and also skewed to Tesla as a manufacturer. But I mean, if we look at some of the trends in the States, one really interesting point is Ford have produced the F-150 Lightning. Now, the F-150 is the top-selling car in the US. Obviously a RV or a truck. Now, this F-150 Lightning has an order book which is completely filled in terms of this year's production, and we're seeing that these types of cars are bringing new consumers to market, so building the overall addressable market, and we think this trend is only going in one direction.
That's really interesting. And look, I guess moving on from that, I wanted to talk about the reasons that most consumers are holding back, both in Australia and I guess around the world, on buying EV at the moment. So the commonly cited reasons, I guess, one is cost, two, and we'll probably get into this a little bit later on, is range anxiety, and then three, concerns over resale value. So are these factors real or are they imagined? And do EVs need to improve these sorts of concerns before we'll all be driving one? Or do we just really need to change consumer perceptions?
Yeah, a bit of a combination, Blair. So if you look at cost in Australia, the cheapest electric vehicle you can buy is the MG ZS EV, and that has a starting price of $47,000. The Tesla Model 3 starting price of about $62,000. So these are accessible for a lot of consumers, but not everyone, not yet. Now, in terms of range anxiety, like how far these cars can drive on a single charge, that base model MG has a range of just over 300 kilometers. The Model 3 a range of around about 400 kilometers on a single charge. Now, I mean, for people like you and me, Blair, who live in the city and perhaps making one or two regional trips, look, that really is kind of enough for almost all of our driving. And if most of our regional trips are on the main routes between larger cities, there is charging infrastructure there. But there are, Australia's a big country, and there is a need to build up that charging infrastructure, and we know that state governments are spending money to incentivise further infrastructure build out there. And I guess the other point there is that if you are doing that trip, say from Melbourne to Canberra, and you do need to stop to recharge, how long does it take to recharge? And now this is something which automakers are keenly aware of, and we'll see that the next generation of EVs will have charge times of around about that 20-minute mark. That's what they're sort of aiming for. Already the Porsche Taycan can be recharged up to 80% in 20 minutes, which is a pretty good outcome, and we're only going to sort of see that improve. So I think over time we'll see that the cost and that range anxiety disappear. The other question that you mentioned is around resale value, and some have concerns around what happens to the battery of this car, and does the car become unusable? I think this is a bit of a misnomer personally in terms of the latest generation of electric vehicles. We sort of think about our iPhone, and it seems that the lithium-ion battery in the iPhone lasts for about 3 years before it dies. The batteries used in these cars are far more advanced in terms of battery management and ensuring the life of that battery. They erode at around about 2% capacity per year, and almost every single EV manufacturer has a 8-year warranty which guarantees 70 or 80% of battery capacity after that 8 years. And then further to that, we know that those batteries are still valuable at that point, and EV manufacturers are starting to set up schemes where those batteries can be repurchased and reused for other uses, or in fact recycled. So there's still value in the battery even at that point. And so in my belief, that's a bit of a misnomer. There are some real concerns there, and I think as a whole though, the progress means that, and the adoption we're seeing is showing that those barriers are starting to be eroded.
Yeah, I certainly think that's the case, and it's really interesting to really see that through the added adoption, we are seeing a change in the public landscape or perception of EVs in general. I just wanted to hone in a little bit more on batteries, if I could. So, how has that battery technology evolved over time? I mean, more recently we've seen supply chain disruptions and certainly high commodity prices over the last few months. Has that impacted EV makers and pricing and things like that?
Yeah, this is something that's started to be, sort of talked about. So over the long term, so over the last 10 years to the end of 2021, battery prices, the price per kilowatt hour came down about tenfold, right? So, an extreme improvement in terms of efficiency and cost in batteries that we've seen through innovation over that time period. At the start of this year, the first quarter, the price per kilowatt hour has actually increased by about 30%. And that's due to obviously supply chain bottlenecks, issues around Russia and some of the raw materials that it exports. So there is some cost pressures, and that's impacted prices that's been passed on to consumers in the short term. But consumers are also thinking about the price of oil and the fact that, do I really want to be paying, over $2 for a litre of oil? So, there's pressures both ways. And I think that what we tend to see with these, if you like, cost pressures on commodities is in the past it's spurned further innovation. So long term, it generally has been a good thing to see these sort of short-term squeezes. Now, I mean, if you look at the battery used in an electric vehicle, these are lithium-ion batteries, and they consist of three main components: the anode, the cathode, and then the electrolyte, which is what the lithium ions pass back and forth through. And it's really been the revolution in terms of that battery chemistry and the way these are made and the scale in which they're made, which has driven that price down. What those battery makers are trying to do is they're trying to optimize the energy density for the cost of the battery. So energy density will give you the range which that vehicle can travel. Now, I mean, the best batteries in terms of energy density on the market have a cathode which is made out of nickel, manganese, and cobalt. And some of these materials are quite expensive. It contributes about half the cost of the overall battery. But these batteries, these NMC batteries as they're called, they're used in the top model cars, the top of the range cars. Tesla uses a slightly different chemistry, but essentially the same. That cost is obviously a factor, and we've seen a different path taken by Chinese battery manufacturers that used a technology that involved an iron phosphate cathode, so far cheaper materials, and they've managed to optimize energy density to a point where they're not quite as good as the NMC batteries, but they're good enough for a lot of consumers. And now Volkswagen and Tesla, for their base level cars, are using these LFP batteries, which is obviously helping drive down costs. So we're seeing different batteries used for different consumer segments. And then obviously on the horizon, one thing that everyone's excited about is solid state batteries, where the liquid electrolytes replaced with a solid electrolyte. They offer a number of advantages in terms of cost, safety, and weight, which may mean that we've got electric vehicles that can travel 1,000 kilometers on a single charge and take 5 minutes to recharge. So, that's really exciting. There's some issues trying to bring that to market, which need to be addressed. But there's companies like QuantumScape in the US who are working on commercializing that technology. And then really sort of almost adjacent to batteries, we've got hydrogen fuel cells, which have their own challenges, but have advantages, which might mean that if we look at their energy density and the recharge times, they might be quite specifically used in, say, for example, long haul trucking. So there'll be a range of solutions for different segments of the market, and just be very exciting to see how it all plays out.
Yeah, very exciting indeed, and that's a really good overview. Thank you. Look, I just wanted to, I guess, move on to talking a little bit more about what goes into the cars, and I guess we can explain the slide in a second. But Cam, I'm currently driving around in a Volkswagen Golf. I wouldn't say it's a nuts and bolts vehicle by any stretch of the imagination, but it certainly doesn't include much technology. I mean, I've got a rear parking camera for parking. That's about it. When can I expect to be driven rather than driving? And is this technology perhaps closer than we expect?
Yeah, okay. So I mean, with that, do you have, for example, adaptive cruise control in your Golf, or?
No,
okay,
no, none of that.
Yeah, okay. So we're sort of on a journey in terms of the autonomous vehicle. We're certainly not there yet. The industry's adopted a number of levels, and they're defined by the driver assistive technology that the car has. Your level one automation is something like adaptive cruise control, automatic emergency braking, where you've got potentially a camera and a radar at the front of your car, which is taking evasive action. And we then move to what's known as level two, which is known as hands-off driving. So essentially the car can steer, brake, and accelerate, but you can't trust the car at that point yet. You've still got to keep your eyes on the road. The car will generally have sensors on the steering wheel or a camera, which is watching the driver's face to ensure they're still keeping their eyes on the road. And this is where actually, Tesla's full self-driving mode is at. That's that level there. The next level up, which we haven't really yet got to, is level 3. And this is the level which is known as eyes off. And so the car, is essentially driving itself. But there's a lot of issues around the amount of backup and redundancy required in the car's ways of evaluating its situational environment. And the automaker, there's a grey area as to where they accept legal responsibility in the if there's a crash. So we're not quite there yet with cars. We've got cars that are probably on the cusp of that point. The level beyond that, level 4, is what's known as mind off driving. So you can essentially have a sleep in the car. I'm looking forward to that one. And the car will drive itself based on a set of conditions. So for example, in a city which has been geo-mapped by the autonomous software provider, but the car, in that case, if it encounters a situation it can't handle, must be able to navigate and park itself in a safe environment, and then in case the driver doesn't wake up from their sleep. Finally, you've got that level 5, which is essentially full self-driving in all environments. Theoretically, you don't even need a steering wheel. Now, this is a long way off. The legislation around that has not been developed. We'll get there eventually. As to when, hard to tell. But that's the path we're on.
Yeah, okay, that's really interesting stuff, and I guess hopefully for me and yourself, sooner rather than later in terms of being able to have a rest while in the car. But how's the shift to electric vehicles and autonomous driving impacting the auto industry as a whole?
Yeah, look, I mean, this is really important, and some of this is shown on the slide here. The move to autonomous driving is increasing the technology content in the car. So the number of sensors, whether they're cameras, radar, lidar, the number of microcontroller units, essentially small computers, the semiconductor content of the car, all the electronics is increasing. And so that's a big thing from autonomous driving. But you've also got the shift from an internal combustion engine to electric vehicle powertrain. An internal combustion engine has more than 200 moving parts, and this is an incredibly complex, machine. But we're really moving from that machine to a computer. Your car's becoming a computer, and so the supply chains in the auto industry. A car manufacturer has thousands of suppliers that build various bits and pieces to make that engine click. And if you're manufacturing carburetors, fuel pumps, pistons, spark plugs, all of that just goes, right? And then you've moved to a car where electronics, software, batteries, all this equipment becomes the force. So we haven't got to that tipping point yet, but that's certainly coming, and that really is going to upend the entire automotive supply chain.
Absolutely. So Cam, I know, we've spoken about, let me just get this slide back up here. We've spoken about, EV vehicles, but I've noticed, whilst getting into Ubers recently, that the price is going up, certainly at a skyrocketing rate. I know that there's safety concerns for some people regarding getting in taxis and different sorts of, rideshare vehicles, given, you really don't know the driver's level of their driving record, whether they've had any accidents, things like that. As a combustion engine driver currently, as we've sort of discussed, I've been following global supply chains and conflicts as well, watching the price of oil increase, certainly over the last few months in this country, and recently spending over $2 a litre at the barrel. Can you run through the economics of autonomous taxis and what it could look like if it becomes available?
Yeah, of course. So obviously the benefit of pooling the capital resource, the car, in any sort of taxi service or share, something like Uber, there's the benefit in terms of that capital cost per kilometre is lower. But the issue for taxis, and indeed still for Uber, it's not that different to a taxi service really, is that you've got this sort of latent resource of a human sitting behind the wheel driving, right? So where we see that real pickup is that an autonomous taxi, electric vehicle autonomous taxi, it gets you to a price point which is below that of owning your own car, and it also has a level of convenience to an autonomous taxi in certain circumstances. So that's where we sort of see the step change is off the back of the two other technologies enabling shared mobility platforms. And look, Uber is obviously a front runner there, but we may well see a company like Tesla jump into shared mobility as an adjacent space. I mean, they've got a lot of the technology and advantages that they could exploit here. So this will be a really interesting space to see how that evolves too, and what players will come into it.
Absolutely. So just to really sum up what Cam's spoken about into an investment opportunity, what we've got here is just the BetaShares electric vehicles and future mobility ETF. Ticker code there is DRIV, D-R-I-V, and really what that's doing is tracking an index of 50 global companies intended to provide exposures to the shift in auto industry to electric and autonomous driving, and also future mobility platforms. So it was launched last December, so it's a relatively new ETF for us. Price points at 67 basis points per annum. And really what we feel in releasing this ETF is that it sits between two global mega trends or shifting in the way we think as a species. So one being climate change and the second being technology. And really what that's giving you is a potential long growth runway potential where you could see returns in the future. So ticker code there is DRIV. Cam, I think we're going to have a little bit of a discussion, or you're going to run through some of the companies within the portfolio. Clearly they're the top two being Tesla and Uber, very much household names. But did you want to just run through a couple of other names or even discuss Tesla a little bit more? Because really when we think of EVs, we think of Tesla, and just a bit more information on some of those.
Yeah, thanks, Blair. I'll try and be brief, just in the interest of keeping to time and ensuring we've got some time for other questions at the end. But I mean, if you think about traditional automakers, there are commitments that have been made by almost all automakers to move to EVs, but certain automakers are more transition in terms of their business model, in terms of the economic or the industrial complex that sits behind them to that EV space. And Volkswagen is certainly a leader there. And another traditional automaker that's quite progressive is also Volvo. And then we obviously have the pure players like Tesla, BYD, and those that sit in this fund. So I mean, that's obviously an important segment, but I talked about, the technology, the components used in electric vehicles and autonomous vehicles, and that's captured in those smart auto components and the innovative driving technology components. Companies like Infineon, like Aptiv, that really seem to benefit from the increasing content in a car of the future. Shared mobility platforms, and then, specialist battery manufacturers. There's actually not too many pure play EV battery manufacturers. So QuantumScape is one, Samsung SDI is another. So it's going to provide exposure to the theme as a whole, and the idea is that we'll benefit no matter where the winners sit within that theme.
Great. Yeah, I think it's really interesting to sort of think of, there are car companies included in this portfolio, but it goes a lot further than that. And you've sort of run through that smart auto components and different bits of things that go into a car that is changing that landscape from those old, fossil fuel based cars to now going electric. Cam, I'm really conscious of time, and for everyone that's joined in today, again, very much appreciate your attendance. I know we've gone 3 minutes over in terms of the presentation itself, but if you do need to leave now, we will have a recording of this up on our website. But in terms of the formal presentation today, that's it. And I think, just in general, things to keep in mind. Certainly with any investment, there is investment risk, and I would encourage you to go over these slides in entirety when considering the risks of the fund. But wanted to open it up a little bit to questions from the audience. We might pause for a couple of seconds just to count them coming through. I can see a few here now. And Cam, if you're happy to stick around and just answer a couple as they come through.
Shoot.
Fantastic. So just seeing this here. So one that's come through, are electric vehicles actually environmentally friendly when they're often recharged using fossil fuel generated electricity? That's a really good question. I think we all sort of think of that. What are the flow-on effects from recharging, and is it having an impact on the environment? Yeah,
really important issue. So we have another fund, Earth, ticker code EATH, where the index construction, we work with a partner called iClimate Earth that they actually, evaluate the entire product life cycle of, for example, electric vehicles versus internal combustion engine cars. And even if, some or all of that power which you use to recharge your car is from a fossil fuel source, we find that electric vehicles are, still better for the environment, and including, the added carbon from manufacturing a battery. Just to take an example, in China, where obviously coal is a large part of the energy mix, the carbon cost per mile of electric vehicles 180 grams per mile, whereas for a internal combustion engine car, it's roughly 250 grams. In a country like France, where nuclear is a large part of the energy mix, it's far lower in terms of the carbon. So it depends on the energy mix, and we know that energy grids are changing in terms of their renewable content too. But even the starting point is a tick for electric vehicles.
Thank you. And just another one that's come through, LiDAR technology that's used in autonomous driving. What is that exactly?
Yep. Yeah. So LiDAR is light detection and ranging. And you can think of it like radar, but rather than using sound, we use pulsating lasers to bounce off surfaces and form a three-dimensional view of your landscape. Companies like Luminaire, which is in DRIV, and other companies like Mobileye are involved in that technology, but that's an important part of autonomous driving.
Another one coming through, and thanks for that, Cam. I see, the question is, I see that Nikola, the truck maker, is included in DRIV. Do you think that company will succeed given its poor track records? I don't know if you can go into any specific details, but any commentary there?
Yeah, look, I mean, this is a new space, and obviously there's a lot of new companies. Typically, we see in a new industry like this, there's often like a relatively high failure rate of companies. Nikola, I mean, they probably overpromised on their technology originally, but they've moved into the production phase, so they're certainly making inroads there. I guess part of the point of using a thematic ETF, which is leveraged or essentially weights stocks by market cap, means that the share of Nikola in this ETF is very small, less than 1%. Now, a few years ago, people thought Tesla was a joke, right? But the point of having market cap exposure is that if Nikola does become the next Tesla, you increase the weight of that stock in your portfolio as it succeeds. And that's sort of part of the point of owning the theme as a whole and not trying to pick individual winners within that theme, which is very hard to do, obviously.
Yeah, I think that leads on to another question just about the fund size and whether that presents any issues. So the way the ETF works is as the fund size grows over time from people investing, we will just simply buy more according to the weightings of the stocks within the portfolio. So should have no issues with respect to being able to get in and out. And certainly we just scale up our exposure to those companies according to the index weighting. Cam, another one coming through just on Tesla, which I mean, I must admit, this is one I've thought of myself. But in terms of Tesla, some of the negative commentary coming out in the market just with respect to their autonomous driving and legal issues, any commentary there on what's happening and whether or how that, I guess, expands in the future to accommodate autonomous driving, whether that can be done, whether they want to take on that legal risk. Any commentary from you?
Yeah, so look, I mean, I guess one of the misconceptions and potentially this is a misstep by Tesla is, I think, in the branding of their autonomous driving technology, which isn't yet, it's called full self-driving, but it's actually not something where the car drives in all scenarios. It's probably a misleading name. The driver still has responsibility and should still be watching the road if they're using that functionality. And one of the good things that Tesla has and advantage it has in the race for autonomous driving is that unlike other companies, it has a fleet of test drivers out there, which number in the hundreds of thousands, which is all the existing cars. Whenever you plug your Tesla back into the wall, all of the driving data from that trip's uploaded back to into the cloud and analyzed by Tesla. So they've got an incredible advantage in terms of data collection, which is a big part of AI learning in terms of developing autonomous driving capabilities. So we'll see what the future holds and how quickly they get there.
Oh, great, thank you. Look, I think that's all the time for questions that we have, but certainly if you do have any more, please continue to engage with us on our social media channels. More than happy, and I'm sure Cam's more than happy to answer them personally. What I'd say just before we finish up is this is the first in a number of segments on our thematic investing range. So if you've enjoyed today, if you're keen to learn a little bit more about our different thematics in the market, we will be running another webinar in 2 weeks, and I'll just check what that's on. I think it's e-commerce and digital payments on the 19th of May, followed by digital healthcare on the 26th, and then gaming and esports on the 2nd of June. So I would encourage you to sign up for those. We'd love to have you and engage in a conversation. But once again, thank you very much for your time today. I know I've enjoyed speaking to you, Cam, on this topic. Very, very interesting stuff. But appreciate everyone's time and hope everyone has a good day.